Well, I do think that one of the concerns that we saw last week was the breakdown in the well-functioning of the US Treasury market, and that is the most important asset market in the world because of the role that it plays in the global financial system. And it was notable that Jay Powell, in his press conference on the Sunday, was actually emphasising just the concerns that the Fed had around the operation of the Treasury market. It was pretty extraordinary. We had obviously, 12+% down day in equities, and Treasury yields were actually moving higher. But we also had a situation where we were getting sort of wiggly parts of the curve. Certain Treasury securities weren't trading correctly. So I think the Fed's gone a long way towards addressing that, although we still have issues in the repo market. We still have a situation where repo rates are quite a bit higher than the Fed funds rate. So again, that's a concern, and that does, I still think, speak to this kind of broader liquidation. And then in Europe, the ECB is going to have to come back. It's not done enough. I mean, I know it was a bit of a disaster of a press conference, but again, I find it disturbing that in a situation where we had such a big sell-off in equities yesterday, bond yields, admittedly from very low levels, but actually moved higher, not just for the so-called periphery of Italy and Greece and Portugal, but actually also for OATs as well. I think the ECB is going to have to come back soon.
Exactly what you don't want to see in the markets at this point, because there's no protection then for investors. I want to get to the timing, because what we're hearing a lot of is that you need to get a sense of the extent of the downturn and what sort of fiscal measures are also coming into place to mitigate against the impact for businesses, for consumers. So then we can judge any recovery, what it's going to look like, how strong it will be, when it will happen. I thought it was curious to see the response yesterday on Wall Street from investors when Trump was talking about July, August being the time frame when we start to try and get past the worst of coronavirus. I'm surprised that the market responded so strongly, given we were talking about that time frame here with Boris Johnson the other day. So what do you make of the timing in terms of what investors are pricing in with this sell-off and what they're pricing in terms of recovery?
I think you're absolutely right, Karen, that when we see how the market has been reacting, whether it be to announcements by President Trump and others, has been the sheer uncertainty and the tail risk associated with we're in recession. Okay, let's not debate that. We're in recession. How deep it will be and what will be the duration. And the duration of that is going to be critical, because for a lot of businesses and companies, you're looking at a very severe liquidity squeeze. I would say that at the moment, it's a fast-moving kind of consensus, if one can describe it in that way, has been it's going to be a hard hit in Q2, but would be towards the sort of looking at this, the end of that recession, sort of May, June, and then we'll have a reasonably strong recovery into the second half. It's going to be short, sharp recession. That may be what plays out, but actually at the moment, until we have any real sense of when the virus itself will be contained and then the countermeasures to that will be eased, one could quite comfortably also see that extending into Q3. And I think sort of President Trump was kind of suggesting that maybe that does extend into Q3.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.